Hi everyone, I'm Ken, the inventor of the CTKS method that shows where smart money is buying and selling. Each day I seek to give you an edge in the market using professional smart money rules and thinking based on my more than 30 years experience in financial markets, to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. If you want to get the institutional edge, please subscribe. You'll find we have one of the best communities on YouTube. Let's run the numbers. Bitcoin is currently up 2.99% to 23,606. Ethereum is up 4.60% to 1645. In this video, we're going to talk about Rule 760, Start Small and Scale. Traders and investors, when they first enter the market, they enter Zone 1 and Zone 2. They want to go all in and more. Traders and investors in Zone 3 and Zone 4 think completely opposite to Zone 1 and Zone 2. They know it's very important to start small and scale, get into synchronization with the market. What does start small and scale actually means? The first thing it means is you compare the rate of return towards bank interest. If you had $500 and you wanted to put it in for some kind of fixed term, what could you get? 3.4%, 3.75%, 4%. You get the idea. Of course, that rate could go down if you're with Chase or Bank of America, but don't forget these are annual percentage yields. That means that you need to put your money in for 12 months to get that percentage. In Zone 1 and 2, people are looking to get rich quick. They're looking to retire quickly and do the minimum amount of work. That's why they're chasing 10x's, 100x, 1,000,000x, as many x's as they can get. Veterans know not to do this because it's really difficult to do. Also, it can take an horrendously long time. You're better off scaling, and I'll show you what I mean. I wanted to show you a trade that I did in the past 24 hours on Woo Networks. As a trader, I'm in and out of different cryptos, so I don't recommend any specific token for you. You must do your own due diligence, but I'll show you what I did with Woo. First of all, we need to start with the context of the markets. The markets were red yesterday, as seen in episode 819. There was also a lot of negativity inside the markets. So what did I do? I didn't listen to negativity because honestly, I don't care about the negativity. What I care about is the price action. Inside the masterclass, I'm very transparent with what I buy and what I sell. I always show you the results. Now, what we can see here with Woo, I bought at 21.25. That's this particular line here, 21.25. And I sold at 22.60. That's this line up here. You might notice that this took a little bit of time to actually fill. Why was that? That's because I was waiting patiently. I basically put the buy order in here as price was coming down. And don't forget, the market yesterday was red. And it took literally half an hour for that order to actually fill. Now, what sometimes happens is that you'll place your order and some of it will fill and the rest of it won't fill. That's called a dangling order, and it's a bit of a headache, but they do happen as well. If you've ever placed an order and you get a partial fill, you'll now know what that means. Basically, price came down, but there was a degree of buying or filling of your order, but it didn't completely fill. In this case, it completely filled. And if we add up all of these numbers, and I've done that here for you, we would get 499. So if we wanted to put, say, $500 into a savings account, what could we get? I guess 4% in 365 days. Let's see how we went. What I actually did is I put the sell order here because I felt that was a fairly good retail resistance level, and it did ping around close to the top, but I wasn't seeking to do that. I was just seeking to gain an entry and an exit. I want to show you the art of scaling. What we can see here is that the investment was 499.991250, which is just over here, and 531.7554. was the return. So that was about 6.35% and done in 19 hours, a little under 1 day. I would suggest that's better than bank interest. Unfortunately, a lot of people don't understand how percentages work. If you annualize this specific return, the annualized return is quite large, a little bit better than bank interest. What does actually annualizing a return mean? It means you're making this specific percentage, well, hopefully more, each and every day. You're literally just riding the waves, and it really adds up. In Zone 1 and Zone 2, people want to get 100x in one hit. You can see you can do much better than that getting in and out of the market. Our community is famous for Rule 621, buy on red, sell on green. Here's BORSOG, the price eagle, screeching away. He's saying, buy on red, sell on green. You don't necessarily just buy on the first red and sell on the next green. You don't do that. You need to have knowledge about what you're doing. But this rule is incredibly powerful. And I hope you like this little NFT that I put together. I'd like to show you another trade that I did with Clayton. Clayton is all about the metaverse. Gaming is already a huge industry, and the metaverse will be huge as well. Yesterday, the markets were pretty red, and I placed my buy order here. As price dipped down, I got a fill. And you can see it took 2 fills to get that particular fill. Where did I place my sell order? I placed it up here. Why is this line red and why is that line green? Because we BORSOG. We buy on red and sell on green. Why don't I provide more of these trades each and every day? Because when the markets are green, there's no need to. People are making money and they're pretty happy about it. When the markets are red, people need guidance and they need inspiration as well. I do these trades to help people to understand that you can make money in any market. Going up, going down, it doesn't matter. And we're going long at spot. What does that mean? What does long at spot mean? It means that the $500 that I placed into here was my $500 that I own. It's not leveraged at all. I don't pay daily fees and I can't get liquidated. In Zone 1 and Zone 2, people say, oh, Ken, you're so stupid. You know that you could make 10 times as much as that. Yep, you could, absolutely, definitely, and you could also lose your entire account, and I'm not into that. Okay, let's go through this particular trade. You can see that I bought at $27.93 just here as the price was retracing. And where did I sell? At $30.97, just this area. Am I upset? Price went higher. I didn't get the actual top. Oh no, something went wrong. Nah, no, don't ever think that way. It's not a problem at all. You're just looking for the sweet spot inside the market. What about where I bought? Shouldn't I have bought lower and just bought there? No, it doesn't matter. So long as you're participating and you know what you're doing, that is the critical thing. So let's have a look at the return. When we start small and scale, we're looking to turn our money over in reasonable periods of time. And this trade was completed in 12.5 hours. What was the amount of money that was put in? So the 277 and 222, these two numbers here, they were the buy levels. So 500 was popped in and the 105 and the 448 are here. 553 was returned. So what is that actual return? It's a little over 10%. And when we look at the annualized return on investment, it is quite high. As I like to say, it's a little bit better than bank interest. If I can do this, you can do it too. But the key is you need knowledge. I wanted to actually give you another trade from LDO. This LDO trade is a little bit different. It follows on from the LDO trade that I did previously. You can see that as price was coming up, I bought at this level, 2871. This is this 2871 here. And then I placed another buy order below and that one got filled. That was at 2712. I'll just give this up a little bit. 2712. You'll notice that the sell price is 2917 for this particular one. 2917. Where is that? It's right here. And I got a fill on that second buy order in 20 hours. What about this one? This 3071. Right up here. 3071. That took 1.5 days to get. The reason that I wanted to show you this particular trade, a lot of people just go in at one spot. Inside the masterclass, I teach people to layer into trades. You must be very, very aware of where retail will be looking to get out of a trade. That's generally where we're looking to get into a trade. I thought, through my assessment, using all the masterclass techniques and especially the BORSOG secrets, I assumed that the retail market would seek to get out at around the 2712 mark, and that in fact happened. I don't try to pin the exact bottoms or pin the exact tops. You can never do that. And the fact is that price is always moving in a wave, and those waves are what we take advantage of. Let's have a look at this 1.5 day trade first. This particular trade I bought at 2871, which is this 2871, and then I sold at 3071, which is here. It took about 1.5 days. What was the percentage return from that? It was around 6.75%. And when you look at the annualized return on investment, it's not too bad. A little bit better than bank interest. What about the second layer buy? I'll just add these two buy levels together for you so you can see it's $200. So I bought here and then I sold up there. And what did that all actually add up to? A 20-hour delay in the fill. And what is the return? It's a little over 7.5%. The question is, how do you get the knowledge to do these kind of trades? It's all inside the CTKS Masterclass. First, you must understand that if you don't have the knowledge, you will make losses. You need your foundations. You need to contextualize the crypto market and then come back into the crypto market and find the market's focus. There's always a focus in the market, and when you find it, you can really do well from it. Before you buy and sell, you must master your emotional control, or else what will happen? Your fear will take over. You need courage, especially when the red days come, and the red days will come as they always do. And then there are many, many different ways to buy and to sell. LV21 in the living video section of the masterclass that keeps your knowledge updated with the latest events is really, really good. BORSOG Secrets is fantastic. A very kind thank you to Beardy, who is offering a CTKS partial masterclass scholarship. If you're interested in the masterclass scholarship, there's a link in the description where you can apply. The masterclass does require a lot of persistence, dedication and commitment, but the rewards are there, as you can see. We're going to look through the crypto market and see if we can uncover some hidden gems. These were the 8 greatest gainers that we looked at yesterday: SSV, STX, DYDX, Theta, LDO, Ripple, Rocket Pool, Litecoin and Cake. They were the top 8. Let's see how they've changed around now. We can see that the top 8 gainers, SSV is still number 1. What about Neo? That entered, followed by Maker, Clayton, BAT, Synthetics, LDO and the Graph. There is one particular crypto that looks quite interesting here. See if you can pick it. Please chat about it in the comments if you see it. We're also keeping our eyes on the greatest losers. Yesterday, the greatest losers: AGIX, OP, Synthetics, Engine, Zilliqa, Aptos, VET, and Anchor. And well done to everybody who pointed out Anchor was looking particularly interesting, and it was. In the top 100, it's changed quite a bit. BNX is the greatest loser, followed by Tether, Circle, Binance USD, the DAI stablecoin, True USD, USDD, and FEI. What we're actually seeing, stablecoins are making up the majority of the greatest losers. This means literally BNX is the only thing that's down in the top 100. Another thing that you'll learn inside the masterclass is how to do objective dynamic market structure. That is where smart money buys and sells. We can see that when the core PCE came out and personal spending came out, the markets reacted pretty badly and it just sunk down. But it was caught by a smart money buy level, and it's been caught by that level across the weekend as well. And what we've seen as the markets started to reopen around the world, people got more interested in Bitcoin and crypto. So far, the 23,142 to the 23,226 level has held exceptionally well. Bitcoin is currently trading at 23,447. What typically happens is people do not know where smart money will buy or sell. So when they see price coming down like this, they just expect an inverse of this. It will just keep on going down forever. But when there's smart money buy levels underneath that price, it should slow down, stop and reverse. And that's what we've actually seen. It doesn't always hold, but it generally does. And what you'll find as you grow from level 1 or zone 1, zone 2 into zone 3 and zone 4, it's all about probability. There's no real certainty except the certainty you create for yourself. And marking up the charts this way is a very, very close way to get towards certainty. This is called the CTKS method, and it is only available through the CTKS Masterclass. Across the weekend, we've seen some pretty weird behavior. We've seen that the longs have come out of the market, but the shorts have come out of the market as well. We can also see that this upward price momentum is associated with shorts getting liquidated, but this downward price momentum that we're seeing just right now is associated with liquidating long positions. Over the past 24 hours, there's been 45.65 million in total liquidations across 15,445 positions. And when we look to total liquidations across the past 24 hours, just what we were saying, the majority are short, and that's evidenced by the upward price momentum, say about 79% of total liquidations. Across the past 12 hours, you can see it's starting to lower, about 77%. What about the past 4 hours, starting to lower again, 76% short. What about the past hour? It's gone the other way, 93% long. And that's actually what's bearing itself out inside the charts. But don't forget, across the weekends, we have low liquidation volumes. We're going to go quickly now. The top 8 cryptos, just keep your eye on Bitcoin's gravity. Ethereum showing some power, BNB also, XRP looking a little bit weak, and ADA not doing too badly. Something interesting that I see in the next 8 cryptos, I see potentially an overcoming of short-term resistance. You can see it here on Matic. You can see it here on Doge, very, very close to overcoming that. You can see it more clearly on Solana. What about DOT? You can see it's very sharp here, but you can see that area of consolidation, a sign of strength. What about with SHIB? You can see that SHIB has become quite explosive. It wants to go up, but there's too many sellers, and the sellers are stopping it. Litecoin can get very light around times like now, so just be aware of that. AVAX still under a moderate amount of resistance, not quite turned around yet. Tron is starting to shine in the dark. About time just to turn on the light. For the next 8 cryptos, we can see something quite different. We can see that Uni is still under an area of resistance, as is Atom. Link is just wobbling around, but it's still looking quite weak. When we look at Filecoin, it's also looking weak. When I say looking weak, that means I'm not personally putting them on my radar at the moment. LDO is getting up to a short-term level of resistance, but you can see it's made a higher low. It could come down quite a lot, and that could be an interesting edge to get in and layer in. Of course, you need to make your own decisions. With NEAR is looking to overcome a very short-term level of resistance. That's a radar, one that we want to look at. Aptos is still under resistance. And what about H-bar? Definitely under resistance and looking a little bit weak. Let's have a look at the next 8. We can see VET is under resistance, just bypass one level, but it's still looking quite weak. APE could be on the starting point of overcoming resistance, but it's still a little bit hard to tell. ICP is still looking a bit weak. Algo looking a bit weak, but potentially overcoming. We'll keep our eye on it. Quant is looking a lot stronger. We can see that the graph is showing a bit of power. The buyers want to come in and push the price up. Go the graph. Phantom is just seeking to overcome initial resistance, and flow looks quite interesting, but we're not seeing a spike up like the graph. This means that with flow there's a lot of sellers pushing the price down. If the sellers become exhausted, flow could really rocket, but it could go the other way as well. The sellers may gain strength and exhaust the buyers. That's a little bit of a it's a little bit of a line call at the moment, but it could be interesting. I've certainly got it on my radar. I hope this video has helped. Rule 760, start small and scale, is very, very powerful. Keeping a positive mental outlook is also incredibly powerful. You need to do it if you're inside financial markets. That's why we have the CTKS Creed. These are daily positive affirmations for abundance, financial success, and happiness. It's part of the routine to get your mind ready for opportunities. Have a great day or night ahead, my friends, and I look forward to catching up with you tomorrow. Bye for now.